If you're reconsidering investing in crypto but have been struggling with when to buy or how to buy, then this video might be the one you've been waiting for. Hey everybody, and welcome to another episode of DCA Crypto Investor. Today we are going to be going over common questions about DCA, and more specifically what DCA means for new investors. This is a great opportunity for me to answer some of the top questions that have come up in the comments section of my previous videos, and in emails that have come into us from all of you guys. If you have any questions that were not answered in today's video, then do let me know down below. As always, like the video if you enjoyed it, and subscribe for weekly content just like this. Okay, let's dive in. The first question that I get asked a lot is, what does DCA stand for? And I can't believe I have to say this, but DCA stands for dollar cost averaging. The term DCA has become so popular within the crypto community that a lot of people forget that those letters actually stand for something. So as a quick recap, dollar cost averaging is a type of investing where an investor buys a fixed amount of a particular investment at regular intervals, regardless of the price. A great example would be buying $100 worth of Bitcoin every single week. The second question that I receive quite often is, how does dollar cost averaging work? Now this is actually a very good question, because the idea behind dollar cost averaging goes against our nature. We naturally want to buy low and sell high. It's human nature to try and time the market, but dollar cost averaging requires you to do the exact opposite. You will be buying high and potentially even selling low depending on the price action of the market. Let's take a look at Bitcoin's price over the last 30 days. As you can see, Bitcoin started off around $42,000 and change and quickly made its way to almost $49,000. Then the market took a downturn, and now Bitcoin is sitting around $38,000. Let's say that we had two investors. Investor No. 1. He decided to buy one whole Bitcoin back when the price was around $42,000. Investor No. 2 decided to buy 0.05 Bitcoin each week for 5 weeks. So by the end of the 5 weeks, both investors would have spent the same amount of money. But after 5 weeks, Investor No. 1 is only up around 12%, while Investor No. 2 is up a whopping 19%. Now don't let this example fool you. Past performance is not indicative of future results. But the point is, if we would have told Investor No. 1 to simply dollar cost average instead of trying to buy at the bottom, he would have made more money. That's why it's called dollar cost averaging. Over time, your average cost per Bitcoin would have been lower than the average cost per Bitcoin for someone who bought at the peak. The next question that I receive quite often is dollar cost averaging right for me? And the simple answer is yes. DCA is a great strategy for beginner investors. In fact, it's a great strategy for anyone. But there's a caveat. DCA is not designed for short-term gains. DCA is designed to allow you to accumulate more of whatever cryptocurrency you're investing in over time. Sure, you may have seen examples where someone bought the peak and someone else bought the bottom, and there is a huge difference in their portfolio value. But remember, you're investing for the long term. Even though we all want to make millions in a few months, it's the slow and steady approach that will lead to long-term success. One of the biggest benefits of DCA is that it takes the emotion out of investing. Think about it. When you invest a lump sum, you're putting your money in and then immediately checking on it every 5 minutes. But when you're DCA, you're just letting your money go and then reevaluating your position after a week, a month, a year, etc. By taking the emotion out of investing, you'll reduce your chances of making a terrible mistake. Another question I get asked a lot is, how long should I dollar cost average for? Now this is actually a great question, and the answer is really simple. Just keep doing it. Don't stop. So long as you have more money to invest, just keep buying. There's no real set schedule, of course. You need to consider how often you get paid and how often you feel comfortable investing. For me personally, I'm able to invest a little bit every day, and that works perfectly fine for me. But if you have bills to pay or an emergency fund to build, then you should absolutely prioritize that before investing any extra money into crypto. Next up, we have, should I be investing in crypto? And again, the answer is pretty simple. Only invest money that you won't need for a minimum of 5 years. And this is especially true for newer investors who haven't had time to build experience. I know that most of us got into crypto to make some fast cash, but remember, along with potential profit comes potential risk. So only invest money that you can afford to lose. If you need that money within the next 5 years, then it doesn't belong in crypto, it belongs in a savings account. Also, please remember that past performance is not indicative of future results. Just because Bitcoin went up 300% last year, does UNT mean it's gonna do the same thing this year? And in fact, it could go down this year, or next year, or the year after. Make sure you understand that investing in crypto is a long-term game. Now this next question is, which coin should I be DCAing into? And the answer is pretty simple, by what you believe in. Don't follow the herd. Just because everyone is talking about Dogecoin doesn't mean that you should be buying Dogecoin. And just because UVA never heard of Solana doesn't mean that you shouldn't be buying Solana. Take the time to learn about the different projects and then decide which ones you would like to invest in. Personally, I like to diversify between 5 to 7 different projects, and then I buy a little bit of everything on a regular basis. The next question is, what should I be DCAing into? Stocks, crypto, real estate, etc. And the answer is pretty simple. Do it all. There's nothing wrong with having multiple streams of income. And if you're able to invest into different asset classes, then you should. Remember that correlation doesn't always mean causation. So just because stocks and crypto both went up in 2020 doesn't mean that they're related. If you have the money, then invest into stocks, crypto, real estate, businesses, art, anything that will bring you passive income. And lastly, will I ever make money if I DC again? The answer is pretty simple. Yes. So long as you buy into a project that has long-term value, you will eventually make money. Of course, this isn't financial advice, but from what I've seen, buying and holding long-term is the best strategy for generating wealth in crypto. I know this isn't the answer that a lot of you wanted to hear. You didn't want to hear yes, but it's the truth. So many people are looking for the quickest route to wealth, but it just doesn't exist. Well, maybe it did in 2017, but we're not seeing a lot of 100x coins anymore. And if you're just getting started, you're probably not going to find them anyway. Just stick with the blue chips and the solid projects, and you will eventually make money. Okay, that wraps up today's video. Thanks for watching, and I hope you learned something new. Please don't forget to like the video if you enjoyed it, and subscribe for weekly content just like this. Remember that I post updates on social media every single day, so join the community if you want to be kept informed. I hope everybody has a profitable day, and I'll catch you in the next video.